Welcome to International Securities Exchange's podcast series. Facilitated by renowned educators, ISE podcasts are intended to teach beginning as well as seasoned investors the ins and outs of trading. To find an updated list of podcasts, please visit www.ise.com/podcasts. Please be sure to listen to our important message following this episode regarding the risks of investing in exchange-traded options.
What you would see, though, is that C is a sharper pullback than the previous one marked A. So this can be an indication that you're not going to get as strong of a move as you did coming out of A. It'll still be a flag. It's still a bull flag pattern, but it might take longer before it hits a larger target, and it might not be able to gain momentum as easily as it did coming out of B. The reverse is true, where if you had a sharper pullback to start with, you might not see quite as much upside to begin with, but then it bases and you can see a stronger pull out of that. So basically, the stronger your pullback, the stronger your correction, the more there is for a risk of that breakout or the attempted continuation or whatever to be more gradual than the move going into that pullback. When we're looking at the U.S. dollar, what we had here was a couple of shifts in momentum. We were looking at, back in November, we were looking at a lot of price pattern development that had this initial breakout from a trading range. This goes back a little bit farther. You can only see the start of the trading range here. And it broke higher, had a little bit of a shift in momentum here, and that allowed for a bit of a stronger pullback into this 50-period moving average here. There's also support from that level. And as it attempted to move higher, it gained momentum. So we had a very strong momentum move into 88 on the U.S. dollar index. When it hit that level, though, notice that it had a sharp pullback here. Now we have a V pattern, or upside down V. And that gives you a higher indication that you're going to see a longer range hold. So coming off of that V, you then have to start to watch for, well, what is the pace or what is the momentum that occurs? Well, the momentum coming off of this initial low made on this V in October was slower than the momentum had been heading into that initial high, as well as slower than that initial pullback. By putting in a slightly higher high, it helps create more of a trap pattern, a reversal pattern. This could have repeated and done a third high here, which is another type of momentum reversal pattern that I like. So coming off of just this initial 2B, since it was a very small pattern, I didn't take anything right away, because compared to this complete upside move here, this is still a rather short correction given that large rally. So what we were looking at were different ways in which the momentum could shift. One of the situations we looked at was the fact that it might still hold that pullback, just hold it as a pure 2T, or it might have different momentum shifts in here. And what you can see happen is that you had a slower move, kind of almost pulled up about 50%, a little less than 50%. And it's sort of based there heading into December before it broke down. That helped it out a little bit better than had it initially kicked off. If it had initially kicked off the 2T, it probably would have stalled right about here to begin with, and we'll look at that again going into looking at support and resistance. But the fact that it had that kind of slightly little base into the end of November really helped shift the momentum even more. So now we had a very sharp upside move, more gradual move this way, and a more stunted move here. If there had been a little bit more data, it would have looked more like this. Basically a head and shoulders pattern, or a form of a head and shoulders pattern. When you're trading head and shoulders patterns, though, one of the things that I do that's not what they teach in like the traditional textbooks is that I don't use a neckline break, which is just basically connecting the lows between each of the pullbacks. Instead, I will look at that right shoulder and take a break of the trend channel of that right shoulder. What you're going to find is that your odds of success are about the same. I mean, there might be like a 2% difference, but your stops are so much tighter that usually you can get 2 or 3 to 1, or 2 to 3 times rather, what you could if you just used a traditional neckline break for a head and shoulders pattern. Now, we were looking at a target zone back here in September. It pulled back into that level. Notice it tried to form a V bottom again right away. Now, the problem with this, of course, is that it fell very, very sharply. It has a stronger than average momentum move on the downside into December. So in order for it to really bounce back really strongly and break this previous high here, it would have needed some sort of stronger momentum shift to have the most solid break of that previous high. Something like, let's say it did like this to shift the momentum. Then that can help pull things back up here and help lead to another formation that can help break that high. We can still get something like that, but again, what needs to happen is we now have a larger V pattern. This previous zone here is resistance. So we need something which shifts the momentum, that it can allow it to break that high easily. So it might form like a trading range, something like that, that would allow it to do so. Or if this ends up being a breakdown, you would see the momentum shift on the downside within that range. So at this point, what we're looking at is how this is going to continue to form in terms of the momentum itself. What you can see actually kind of helped out coming off of this low is notice that off of this V low here, you actually had a little bit of shift in momentum right here. And that helped pull it back up to that previous high more easily as well. Anytime you have any sort of congestion or something like that, as it tries to come off of more of a V bottom, it's going to help get it going a little bit better. You can even see that to some extent back here in September, in that it held the support right away, but the momentum didn't increase until it kind of based just a little bit, and that sort of helped get it going. The same thing coming off of this high up here. Even though on a larger time frame, it would just look like a V top. The fact that the momentum shifted on those smaller time frames, in this case it was a daily chart, really helps solidify that stronger pullback or that stronger correction into December. And the fact that the momentum was shifting at that high is what led me to the belief that we would have a strong pullback coming off of that high. One of the questions here, sorry, is this a beginner question, but what time frame do I usually use to identify the patterns? Well, it's really going to depend upon the time frame that you're most comfortable trading on. I always use multiple time frames, though, in my analysis. So, for instance, if I'm swing trading, I'm looking primarily at a daily time frame. I'm always going to also be looking at a weekly time frame as well as the smaller intraday time frames like a 15-minute chart or a 30-minute chart. And I will use those smaller time frames for helping with my actual timing on a position. So, for instance, this is a daily chart of the dollar index. The larger time frame on this dollar index was a sharp downtrend, and we were just basically dealing with the first correction off of the low recently.
Thank you for listening to our podcast. To find more podcasts on options, stocks, alternative markets, and market data, please visit www.ise.com/podcasts.